guys, so we might start over here in New Zealand where they raised interest rates and the Kiwi took off on the back of that, and Governor Orr came out and said rates are likely to peak at around 5.25 to 5.5%. So yeah, the little Kiwi rallied pretty strongly and probably will continue as that's another 1% to go. Right? But he also said they're most likely going to head into a recession because of this. Yeah. And so now we're in that scenario where good news is equal to bad news, right? So these are all green, but it's bad news, right? It's under 50, which means contraction. Anything over 50 is growth, anything under 50 is contraction. So euro is contracting. The European economy, yet euro dollar up, and we get durable goods 1%. Right? Now that's good, isn't it? But it's bad for stocks because it means interest rates are going up for longer. So the stock market fell, only to an hour or so later have this soft data come out pretty soft, which is bad news. So stock market rallied. And because bad news means interest rates are going to be going down, and that's kind of how it finished after the Fed minutes was sort of red. It's well, since the Fed minutes, the market sentiment here is still of the fact that interest rates are going to be paused now. So we saw the stock market finish on a high, yeah, and the risk off on the US dollar finish on the low. So this retracement, I was looking for it to head a bit lower, didn't get as low as I wanted it. So I was looking for it around here, I was looking for the Aussie around here. The pound off this high here, the yen back up here, not getting it. I was looking for the US dollar up here, but it's failed off these lows here. So the stocks now rallying, and we've got the Christmas holiday happening. Sorry, not Christmas, Thanksgiving. That's tonight in the US, but most people will probably take the Friday off as well and enjoy a 4-day weekend. So don't expect Friday night or Friday US session to be any kind of excitement. There won't be. It'll be very quiet both the next two US sessions due to that holiday and long weekend. And stocks tend to do okay during that time period. So Christmas rally certainly now well entrenched, and you expect the US stocks to have a look at that high, maybe even test this one leading into Christmas. Then as rates come off, interest rates, it's going to be interesting because we'll be heading into a recession, but interest rates coming off tend to mean better for stocks. So it'll be interesting to see which way it goes. Might find a little bit of resistance there with the confluence of that, perhaps. 41.60 and around there you might find a bit of resistance, but with the stock market rallying, expect the US dollar to continue to weaken, certainly now in a downtrend. It was quite aggressive that it didn't get anywhere near a kind of Fibonacci or similar sort of level. Certainly not from the highs, and certainly not from didn't touch that one. Kind of maybe shied off the 50 there, but off the top it's nowhere near it, the 302. So it's literally those lows there, and that's kind of aggressive that the buyers couldn't get any kind of traction at all. So I think that's more of the same. Bonds coming off as well. So yeah, bonds are off, stocks are up. Why own US dollars? There's a huge rotation out of it at the moment. and commodity market's a bit of a mixed bag, you know, with oil off, gold sideways, copper pretty much sideways. So mixed bag, but I'd stay short US dollars and look for any sort of rally in the US dollars as an opportunity to sell it. Thanks guys, see you tomorrow.